right, let's welcome in Bill Baruch, president of Blue Line Futures, to talk about the market action that we've been seeing recently, including the setup for today. Bill, I'm used to seeing you here at the exchange. All right, let's talk about, what we've seen. Volatility has been on the rise, a little bit lower today, but still above 40 at the moment when I look at the VIX. Tell me, how would you characterize where we are, especially when you see the green on the board today?
Great to see you on camera. Thanks for having me on. I think we're seeing a little bit of a squeeze. I mean, obviously, a ton of panic. If you were reading the news over the weekend, if you were on Twitter or X looking at comments, I mean, there was a ton of panic. And what we saw yesterday, from Sunday night into Monday, was definitely some of the panic playing out on the lows, but maybe some oversold bounce starting to play in. And despite what we're tariffs looming with with potentially retaliatory tariffs from China and President Trump's comments on another 50%, we're seeing this market squeeze higher, and I think that's because we've begun to see some peak panic in the very, very near term, with that spot VIX overnight coming into yesterday hitting 60. But I'd like to think this rally can last, but staying very nimble in the mindset here that we could see any piece of news this morning, or as the afternoon evolves, that could hit it back down. Now, the squeeze here is interesting because a lot of liquidation took place, whether it be Thursday or Friday, forced liquidation Friday into Monday morning, and you're seeing some repositioning. I think if there's no news, we can continue to squeeze into that official start date on tariffs tomorrow, with really 5450 maybe in the S&P, 18,700 in the E-mini NASDAQ. So this thing could really run and bring pain on both sides. I mean, because that's where this trading takes place.
So, Bill, let me ask you, so you think there is the potential to go higher even in the face of tariff deadlines in front of us? We've got April 9th in front of us, April 10th, the potential for really essentially 100% tariffs on China. But do you think there is the potential for, I know conditions, you could probably characterize them as oversold, but there's also the potential that this could be a dead cat bounce that we see today. And maybe it's too soon to tell. What's your overall take then?
Yeah, exactly. I wouldn't say so much of a dead cat bounce, but I think that you're seeing some chase here of repositioning. When the pain came in Thursday and Friday and forced liquidation through Monday, again, markets trying to bring the most pain to the most number of people, and I think what you're seeing here is the washout, and now this sort of reflexivity that where the market is moving, because all the news right now is thought to be known. Now, again, this lives on a whim. We could hear or see a tweet from President Trump in the very near term, pushing on that 50% increase of tariffs on China, and this thing could disappear. But barring news, I think what favors here, it favors the bulls. It favors squeezing this higher, and because I think that's where the market's driving right now. And again, covering that gap from Thursday's close would be the target to the upside.
Okay, so essentially, basically, if I am understanding you right, this looks like the tariffs are priced in from your point of view, especially given potentially oversold conditions.
Yeah, I wouldn't say that tariffs are fully priced in. I would say the news that we have at hand right here, right now, is priced in. Barring new news ahead of tomorrow's implementation, or the exact implementation itself tomorrow, we could see selling thereafter. But between now and then, barring new news, I think this thing could squeeze higher.
All right, let's talk a little bit about where crude oil is. Right now, it's about $61 a barrel for WTI, but we saw massive selling recently, big drawdown last week in crude. It's part driven by that tariff plan, partly. Then we had the news about OPEC Plus increasing supply. So how would you characterize where we are with crude oil?
I think there's a lot of support at $60 in the WTI contract, and we've seen some responsiveness to that support level. Now, the thing that really keep in mind here, OPEC's at play, and if they're going to be bringing production back, where's their line in the sand? I mean, I don't see this being sort of an all-out production and trying to gain market share and drive prices lower. I think that there's fear of recession around the world that's combined with them bringing that production back online is really what's been the really key here, plus liquidation across all asset classes. But again, there's some support here at WTI. However, I think what's more important, if we see continued weakness, is that sort of psychological level in Brent contract, $60 in Brent. I don't know if OPEC really wants to see Brent get below $60. So that would align to $55 to $56, $57 in the WTI contract. I think if you've been short, then this is really a time to be looking to sort of rebalance that trade, monetize the move lower. We used and leaned into in our CTA Blue Creek Capital puts in crude oil over the last week as sort of what are we going to play in our book as risk off? Because we've had other longs in position, so where are we going to hedge out? And crude has been something like that to help us there. But we've really monetized that, and we think in the near term we could see a little bit of a bounce. But the market here, like others, has been a bit of has been broken a bit technically.
And I want to get a quick thought, though, on where you see WTI now based on the framework of, tariffs hitting it, OPEC plus. What's your target on where WTI will be, given that we're at 61 right now?
I think the low range is to look $55. Now, I'm not saying it's going to go there. I think that was our worst case scenario, and that worst case scenario can now be in play. But I do think that if we see any sort of watered down remarks coming out of the White House, we saw the reflexivity in crude oil yesterday, along with other asset classes traded out above $63. I think if we start to see a turn across all asset classes, the upside in crude becomes about $67. So I think we're in a bit of a trading range here with psychological support really at 60 in WTI, and then if we start breaking lower, where we get 55 comes in play, $60 in Brent becomes the really a very big level that we must hold.
Okay. All right. Crude range bound right now. We've got targets on crude from Bill Baruch, President of Blue Line Futures. Bill, thank you so much for your time this morning. Look forward to seeing you in person again.